Hello, everyone. It's Steve with Aptera Owners Club. Today is October 31st, 2022, Halloween, and there is a supplement to the circular offering that Aptera submitted to the SEC. It was dated October 28th, 2022, but it got filed today, went live today. So this is pretty fresh news, and let's read it together. In addition to the Regulation A offering, the Aptera Motor Corporation continues to seek avenues to raise additional capital, including through private placements of equity or debt to fund our plan of operations. On October 24th, 2022, the company entered into a non-binding term sheet with a potential investor. Under the terms of the term sheet, the investor agrees to purchase 2 million shares of a yet-to-be-formed class of preferred stock of the company for $10.50 a share, with total consideration of $21 million. The terms of the preferred stock include granting the investor the opportunity to appoint one director as well as board observer rights. In addition, upon completion of certain milestones by the company, the share of preferred stock will be converted on a one-to-one basis into the company's Class A common stock. This financing is contingent on the completion of financial and legal due diligence and both parties agreeing on the final terms. There is no assurance that this financing will occur. If financing does occur, the earliest it will occur will be in Q2 of 2023. All right, so let's break this down in a little bit. The first important thing to notice is that this is a non-binding term sheet. So this potential investor, and the key word is potential at this point. The investor has not agreed to do this, but they are talking together. And he's saying that I am interested in purchasing up to 2 million shares of stock, and that's worth $21 million, and I will buy them at a price of $10.50 a share. Before I agree to do this, I'm going to have my team look at your finances, have my lawyers look things over, and then if we can agree on the terms, then we're going to go through with this. And if we go through with this, the earliest you're going to see any money is sometime between, the earliest will be March, or actually earliest will be April of 2023. April of 2023 is the earliest that this will occur, and most likely it'll be later. All right. And so breaking this down, he's asking for preferred stock. What is the difference between preferred stock and common stock? Currently, let's look at, this is the makeup of outstanding shares of Aptera stock at this point. There's 55 million shares of Class A common stock. The bulk of these are owned by the founders. Okay, so if you look at these, this is Class A common stock outstanding. And the majority are owned kind of three ways between Michael Johnson. Met Mr. Johnson at the Fully Charged event, super nice guy. And then Chris Anthony and Steve Ambrose. So these are the three major founders of the company. They together own about 45 million shares of the common Class A stock. And the Class A stock has voting rights. Class B stock has no voting rights. So they basically have control of the company because they have all the voting rights. And Patrick Quilter Trust, they own 5 million shares. So they are kind of, in this group, a somewhat minority shareholder, but these is all the voting Class A stocks. Then there's a bunch of Class B stocks. These are all the stocks that most of us have bought through the crowdfunding route. And this is what I own. I own some Class B common stock. And then there's a bunch of Series B preferred stock. These are the stocks. A lot of these are the stocks that people got during the WeFunder round. So remember, the WeFunder round people have just had theirs convert to preferred stock on Carta. So that's how it's going down. They're going to make a new class of preferred stock, and he's agreeing, or he or she, this person is agreeing to buy it for $10.50 a share, which is the current price of the crowdfunding round. So the same price that you could buy it for right now. So what is the difference between preferred stock and common stock? This is a little table showing the difference between common stock and preferred stock. And this is in relation to kind of more established companies. Common stock is what we usually think of when you buy stock on NASDAQ or the New York Stock Exchange. Upside is almost unlimited. You can fall to zero. It can become worthless. Your stock can become completely worthless. There can be quite a bit of volatility. It's more suitable for growth investors, and you usually get voting rights. Preferred stock, usually you don't get voting rights. It is There's a redemption value that you get. So preferred stock is many times thought of as more like a bond rather than a stock. It can fall to zero, but less likely to do so. We'll talk about why. There's less dramatic movements. It's more of a dividend investor, and you can issue as much preferred stock as you want, basically. But in terms of startup companies, preferred stocks mean a slightly different thing. And this is the key benefits of preferred shares to investors. So there's something called liquidation preference. And this is probably the most important reason why this person is requesting preferred stock. So this person is, going to put in $21 million or potentially $21 million of their own money. That's a lot of money. And you want to have some kind of protection if you're going to put in that amount of money. And one of the ways is this liquidation preference. What this means is if they have to liquidate the company, like the company doesn't do well, they're going to have to liquidate their intellectual property, liquidate their, holdings of equipment and everything. So they're going to auction all that stuff off and they're going to get some money from that. And then that money is going to preferentially get paid to the preferred stockholders, the preferred people that own preferred shares. And it's usually at a 1x, which means if I put in $21 million, I have potentially up to $21 million I can pull out of it. You usually don't get more than that out of it, even if the liquidation amount is more than that. So let's say Aptera has to liquidate, and they liquidate all their IP and they get like $50 million out of it. Well, this guy is going to get $21 million of that, and whatever's left over will get divvied up amongst the other preferred shareholders and the founders and the employees. And those of us that have Class B common shares, we're last in line to get anything out of that, and most likely will not get anything out of that. So in the case of liquidation of the company, people that go in the crowdfunding round now will probably not get much, if anything, in terms of value out of that if they liquidate. The guy who invests $21 million and gets preferred stock, he's going to be kind of first in line to get any proceeds from that. There's something called anti-dilution protection. There's two ways it can get diluted. One way is that they have to go through another round of financing at a lower valuation, so less than $10.50 a share. If that goes into effect, they can adjust the price at which preferred shares convert to common shares. Right now, he's saying that it'll convert on a 1-to-1 basis, but there could be a clause in there that if they have dilution by raising money at a low rate, he'll get maybe 2-to-1, like 2 shares of common stock per 1 share. That these could be in there. And then there's another called pro rata rights, which means that if they're going to increase more shares, even though the valuation of the company is higher, he has like a right to buy more shares to keep his shareholding percentage the same. I'm just going to use he. It might be a woman too. Who knows? But just easier to just keep one pronoun in here. Other protective provisions. So they get other protective provisions, and that is probably this thing where he says, I want to be able to name a director. Okay, currently there are 4 directors. The 4 directors are Chris Anthony, Steve Fambro, Brian Snow, and Doug Louie. These guys are the 4 directors. So this investor, he or she, is saying that they can appoint 1 more director on there. So there'll be 5 directors. And they can actually observe the board meetings if they like. And upon the achievement of certain milestones by the company, The share of preferred stock will be converted on a one-to-one basis. We don't know what these milestones are, but once they hit these milestones, it will convert over. I don't know if the milestone is if the company goes IPO. My guess is that's what it is. My guess is the milestone is the company going IPO. Then it'll convert into Class A common stock. Because once you become Class A common stock, he or she gets no liquidation protection or preference. But at that point, the company's not going to liquidate. It's available on the market. I'm almost positive that that would be like an IPO event. The other things don't really make sense to me. This financing is contingent on completion of financial and legal due diligence. So a couple of things. I don't think that this is going to help Aptera get to production. At least I hope not, because I'm really hoping that Aptera will go into production before April of 2023. And the very earliest you're going to find money from this investor is April of 2023. Here's the pure speculation part of this video coming up. I speculate that this is a person who's very interested in Aptera as a company and the idea of the vehicle and wants to get on in it, but wants to protect themselves financially as much as possible. So that's why they're waiting until April 2023. I think they're waiting until Aptera goes into production. Once Aptera proves they can go into production, the risk of the company is far lower, because that's a major milestone, is to get to production. And this person is being smart and locking in at the share price now at $10.50. My guess is when Aptera goes into production, their share price will go up. It will be more than $10.50 a share. So this person is coming in with a lot of money right now and saying, I want to retain the rights to buy the stock at the price right now, but I'm going to wait until April before I give you the money. Wait till after you've gone into production and prove that you're a somewhat viable company, and then I'm going to do it. And then I'm going to have preferred stock so that if you have to liquidate, I get first in line to get any proceeds of the liquidation. But if you make it all the way to IPO, then I'll convert over. And so kind of like reducing the risk of the operation as much as possible. It's still a risky operation. It's still $21 million. It's a lot of money. But the way this is set up, it's reducing the risk of the investor as much as possible, which I think is a good, a very smart move by this person. And I'm guessing you don't get to be the kind of person that has $21 million to invest unless you're pretty financially savvy, generally. Now, why did Aptera put this out? I don't think that they have to put out this kind of information. My suspicion is they're putting out this kind of information in the hopes of increasing investor confidence in the company, saying, hey, we have a person that is interested in us enough to buy potentially $21 million of stock. And if someone is willing to put up $21 million, you should feel pretty safe, investing a couple of $1,000, because there's someone who's willing to go at $21 million. Another good sign is he is agreeing to buy this at $10.50 a share, which is the current share price. It's possible that he could have come in and said, hey, I have $21 million, but I don't want to buy it at $10.50 a share. I want to buy it at like $5 a share. And I think that the capital markets are very weak, and this is as good a deal as you're going to get. I want to buy it at $5 a share. And it's possible that Aptera might have had to go for that because capital markets are not great right now. But he's agreeing to buy it at the current share price that everyone can buy it for right now, which is $10.50 a share, which I think shows that he or she has quite a bit of confidence relatively in the company, which I think is good news. And so Aptera is putting this information out saying, hey, we have this person that's going to buy 2 million shares at the current share price that you can buy it for. And so you should feel confident in investing in us. And this person on the flip side is setting up the contract in such a way that he or she is protected as much as possible. And the last point is, remember, the key word here is potential investor. Potential investor. This is a non-binding contract. They're basically in talks right now, going through their financial and legal due diligence. And as they say here, there is no assurance that this financing will occur. That's very important. And if it does occur, the earliest will be April of 2023. So overall, I think it's always great news when anyone is interested in investing in your company. That's always good news. And it's even better news when the person is interested in investing a large amount of money, which I would say $21 million is a large amount of money. This person isn't quite the whale investor that would kind of make all the financial woes go away. Like if someone came in and said, "I'll give you $500 million," I mean, then Aptera's capital issues are kind of gone. That they're kind of set, and the financing part of it is a non-issue for them. But $21 million is a big investment, so that's good. So maybe we should call him a dolphin investor, not a whale investor. But that's always good news. And I think Aptera is using this as a way of increasing investor confidence in them. All right. So yeah, this is the information about who the directors are, who owns the voting stock right now, and how many shares of outstanding stock there are. Okay. Well, so if you guys have any questions, please put them in the comments below. Perhaps one of our viewers who's more financially astute than I am can answer them for you. Overall, I think this is really, really good news and helps them out. I'm hoping that with the $22 million they got from California from the grant, that they've raised enough money through the crowdfunding since fully charged to make it to production, which I'm hopeful will be sometime early next year, Q1 of 2023. And we should be getting some more information about Delta coming soon. I find it fairly unlikely at this point that they will have a physical Delta built by the end of this year. That would be quite an achievement. But at least there should be a finalized Delta design announced before the end of this year, and a Delta, physical Delta early next year is what I'm hoping for, and the first production units sometime in Q1 of 2023. And then this is going to kick in Q2 of 2023, hopefully. And that's going to help them do the production ramp a little faster. Okay. Thanks for watching, everyone. And thanks, as always, to our supporting members who have invested in this channel. And have a great day, everyone.